Verizon is one dividend stock down 36% that I think you might regret not buying on this dip here. Why do I think that's the case? Well, that's what I'm going to discuss in this video, so you're going to want to tune in. Let's start. Looking at Verizon's dividend yield, it offers investors a robust yield of 6.57%. That's nearly twice the rate you can get from investing in a 10-year government bond. Now, of course, investing in a 10-year government bond is more safe in terms of receiving your dividend pay, receiving your interest income, and receiving your return on capital. Investing in Verizon stock to get the 6.5% dividend yield is more risky because you may or may not get the same dividend payment over the next 10 years, and the stock price may increase or may decrease over that time. So you're exposed to more fluctuations in terms of your return on investment, but you're also getting compensated for that with a near double dividend yield and the potential for increase in stock prices. And looking at Verizon's annual revenue, you see very nice growth here from Verizon, going from 120 billion all the way up to 136.8 billion. And one of the things I like about Verizon stock right now as a dividend stock investment is, I'm sure you've all been hearing that the risks of an economic slowdown are rising in the US, and the risks of a recession are also increasing because inflation has gotten out of control. Federal Reserve has had to increase interest rates, and of course, when the Federal Reserve increase interest rates, economic activity slows down because now we all have to pay higher interest rates to get a mortgage, higher interest rates to buy a car. So we're going to be a little bit less interested to do those things now that interest rates are much, much higher. So if there is a recession, Verizon is relatively safer than many other companies because one of the last things you're going to cancel is your wireless internet connection. That's one of the last things you're going to cancel, right? You're not going to cancel your cell phone and remain without a cell phone plan, right? And unless it's one of the last things you do, you're going to look to cancel so many other and reduce so many other expenses before you get to cutting off your wireless data plan, right? So in that sense, it's relatively protected from a recession. And then on the other side, for the upside in revenue, Verizon's getting a nice incremental revenue boost from adding new devices to people's data plans. Where it used to be, mostly smartphones, now people are adding their Apple Watch. They're adding a tablet to their wireless data plans, and those incremental additions are big benefits for Verizon because it's just an extra device on a consumer's plan, and that adds to the bottom line significantly. So those two forces are working in Verizon's favor here. Of course, this is not going to be an explosive stock where revenue is going to explode by 10x over the next 5 years, but you don't need that from Verizon. That's not what a dividend investor is likely looking for from Verizon. What a dividend investor is likely looking for is steady and consistent dividend payments with the potential for increases over time. And I think Verizon offers that. In addition to uh, nice revenue increases over the years, Verizon has also maintained and even increased its operating profit margin. You look back from 2014, 2013, its operating profit margin has increased from the mid double digits, around 15%, all the way up to, the 22% over the last 5, 6 years or so. So you're getting nice dividend revenue increases, and you've gotten a nice boost to the operating profit margin. So you're getting a nice 1-2 punch that's increasing profits, increasing cash flow, increasing earnings, which then increases the potential for dividend payments, dividend increases over time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And the final reason I'm going to give why you might regret missing out on this dividend stock right now is because of its reasonable valuation. Verizon is trading at a forward price to earnings ratio of 8.3. That's near the cheapest this stock has been going back to January of 2022, and it's also near half the valuation of the average stock in the S&P 500. So you're getting all of those benefits I talked about in the video earlier, and you're getting that at a reasonable price. That's why I think investors might regret not buying this dividend stock right now. All right, so I've picked a video that I think you're going to enjoy that's popping up on your screen right now. I think you're going to like that based on your taste in this video. So I've selected that just for you, and I think you'll enjoy. So please click on that video that's on your screen right now, and I'll see you over there. Thank you so much for watching.